Hello, everyone. How's it going? Again, always a crazy time when I'm on here. Hopefully, a couple days I can come on and things can be chill. But as always, we're going to go through whatever it is that you guys want to talk about after I do my initial rant. So make sure in the chat you're just asking for a lot of questions and all of that kind of stuff. Any tickers you want to take a look at, certainly will. I got a lot of stuff to talk about as well because, as always, very, very crazy. So I am Michael Nauss, if you don't know, chartered market technician, like a lot of the CMT nerds that are on here. I am a quantitative trader. So, what I do over at my website, statsedgetrading.com, is we just run statistics. We run math and we build strategies. And from those strategies, we take trades. So, makes things a lot easier, especially in environments like this, in which things are crazy. I get to kind of completely shut off the noise and kind of look at everything that's going on, all the craziness as kind of a spectacle with my popcorn out, just hanging out because I know what I'm going to do is I'm going to trade my systems regardless of what happens, come hell or high water. I'll be trading the systems that come from there. So let's get into it just by sharing some screens, getting this open while I wait for some questions. Uh, I guess while I have it up, I can talk about this because I know someone's going to be asking about Weeble at some point. So the easiest way to talk about something like Weeble is just to use a musical chairs reference. So we are up over 20 million shares traded today in Weeble, and there is only 9 million shares in the float. And you got to think of those 9 million shares in the float, there's probably a couple million that are owned by insiders and people who have just bought it yesterday off the open and all of that. So really probably what's trading around is like a few million shares max. So you think about it, if there is only a few million shares out there, and it's trading that float many times a day. That's why I use the musical chairs reference because everyone just the whole company, if we were sitting in a room right now, the whole company has changed hands multiple times a day, even if you don't reduce that 9 million float number by how much is just being held. So, really, the whole company has changed hands many times today. Now, there's really not a lot of technical analysis to do on stuff like this, but the only warning that I will give is that eventually, when the guys out there who own this float end up just wanting to get out, saying, that's enough, I'm out, it will do a Newsmax at some point. Don't know when, don't know how high it will go until it does that, but this was the exact same thing. You had an IPO, that IPO doesn't have a lot of shares out there in the float. You had this massive surge higher, and then all of a sudden, everyone said enough, right? I've made my money from $14 up to 300. This is obviously a much more insane example. And then as soon as that broke, all the way back down to 20. So if you are playing something like Weeble, you just have to know that. This is not driving up the way it is because it's this insanely awesome company that has figured out something that no one else has and that it's going to be worth trillions of dollars or anything like that. It is simply a lot of people are playing against this float. That does not mean it can't double or even triple or quadruple or whatever from here. But at some point, the musical chairs will come to an end. Somebody who has bought down here, like a million shares, will just dump it, and that will cause the same cascade we saw in Newsmax, and it will be over. So, you know, degen safely, my friends. Just be very careful. I always say you can trade whatever you want as long as you have an exit, as long as you have a plan to say, this is where I'm going to get out of this. You can use moving averages or trend lines or the motion of the moon and the stars. I don't really care what it is, but if you're in this from the 30s or the 40s or the 20s or whatever, just again have a plan because inevitably this will happen. We don't know if it's going to double from here and then this will happen, but inevitably this will very likely happen. Let's just say not exactly happen, but because no one knows for sure, but very likely that will be the outcome. So again, just make sure you have some type of a plan going forward. Now, let's take a look at the overall markets. Not a lot is happening, even though we are getting a pretty big move, and that's just kind of a symptom of where we are right now. So if you mark this out from low to high, that's already a 1.6% move of the day, and then we're still up 0.5% on the day. So Massive, massive, massive move. Still, right? But in the grand scheme of things, we're still inside this candle. And I made a tweet and on stock twits on everything, and I am betting that we are going to be inside this candle for another couple days or another couple weeks or until the next bit of tariff news comes out. Until then, we're stuck. So I think you play ranges. I think you play support and play resistance, and you play around these ranges. If shorting when it gets to the high, maybe buying if it pulls back a bit. That's kind of my game plan right now. Is just to continue to play around these ranges because we're kind of stuck. So what's above us? We have these prior lows right here that we broke down from. So anyone who's holding from this period of time is probably looking to sell out as we get closer to that. This is the anchored VWAP from all-time high. You can see we hit that pretty much to the tick before falling apart, and that's right above us here again. And then a little bit further above, we have the 200-day moving average. So we have a lot of resistance above. And then below, we have a lot of support, right? So below, we have all of this action here. We had where the tariffs were pulled back, the tariffs were kind of chilled out a bit, and so far that's going to hold as well as until those tariffs come back, because who knows, they could be back today for all we know. So very range bound, very stuck with inside of a range, and even this pullback is coming roughly back to the gap up. This is where we gapped up and we're pulling back into that range. That to me is just normal, healthy, everyday movement, nothing to be excited about one way or the other. It's just kind of the way she goes. You gap up. If the gap up's not too big, quite often you want to pull in and test that gap, and then maybe we bounce from here at the end of the day. Who knows? I've got no idea what's going to happen as the day goes on. But I'm just playing what I'm seeing, which is just a little bit of a sell-off into a range. So again, it's one of those, nothing is happening, but nothing is happening in an incredibly volatile way. So we're getting huge moves in this nothing. We're getting huge moves in the absolutely nothing is occurring type of scenario. So if you're struggling in this market, don't feel bad. It's just the way it works. Now what I'm doing a lot of and what we're doing over at Stats Trading is the systems that look to follow trends have been turned off, and that's just because when we get into correction bear market territory, those systems just naturally kind of turn off. And then the buying support, selling resistance, mean reversion, if you want to call it, looking for things to tank, buying them, having them pop out. I just did a video on my channel for EVER, looking to see if this one comes into this low right here, just a little bit overstretched, looking for short-term bounces and then getting out. That's what I'm doing. It is, again, not perfect, not like anything is, but it works better for me in this environment, is looking for big stretch moves higher and big stretch moves lower. Buy the dip, sell the rip. That's the kind of environment we are until we get something where trends can develop, right? So this is a perfect example. PLTR, we had a sell-off last week. This is purple line is just where I picked some up. Not because I'm a genius, just because that's where the system said. And then it ripped and I got out on this morning. So just a couple days to a couple weeks, shortening my time frame. That's how I'm dealing with it. When we talk about the different sectors that look interesting, I'm very interested in XLF. You can see it's holding above. The market has pretty much closed the gap. XLF is holding above, and it's battling here, which is the 200-day moving average. It's battling back and forth. Financials are very important. They're not super sexy like, semiconductors and AI and robotics and space and all this cool stuff. But you can't have a really healthy market unless the financial companies inside it are healthy, because they're who lend money to all the crazy stuff that goes on out there. So you have to have finance hold on for sure. And then the other sector that I was kind of interested in is healthcare, right? Doing the same kind of thing, holding up pretty well and holding on. We had this head and shoulders type pattern that broke down, and now we're trying to dig in. We're trying to hold on to some of these other sectors. Real estate's doing very well today, and then we have some of the more boring stuff, right? Papa Buffett is just on fire in this market. He is just doing absolutely great. right? If I think it's what weekly chart somewhere, I had a screenshot of him making money while the other billionaires are suffering. So good for him, I guess. Bad for other billionaires. It doesn't affect us, obviously. None of us here are billionaires, but I mean, good looking trade there. So range bound is kind of summarize everything, right? The Qs is fill the gap. The SPY hasn't quite filled the gap, but it looks like it might get there. We are range bound until something happens and says we're not range bound. That's just the way I look at it. So right, don't get excited when we push up too high. Don't get depressed when we push down too low. Just kind of play that range. Someone's asking, where did bull come from? Well, as it cranks the new high here, it's not Bill, bull. Cranks the new highs. This thing's just running. Monster mover. Bull goes new highs. Just it's a Weeble. It's a D-SPAC, right? Which means I'm trying to find the daily chart. Here we go. So anytime you zoom out on your chart and you see this kind of messing around $10 forever, that means it's a SPAC, D-SPAC'd yesterday, and then this massive move again just happened because it's got a low float, got picked up by a lot of those degen rooms that are after it. Good for them. They're probably making a killing, but eventually again the music stops at some point, and good luck after that. So that's where it came from. Just another broker like a Robinhood or something like that. Could be a great company. This is just, a 600% move in a single day. It's just too much. Not ignoring it. Neocorp, NB. Someone's asking about. Is this one of those? One of those guys? No. So in the low end of its range here, so this one is metals and mining, that kind of thing. Non-energy metals. So probably palladium and platinum and all those names. So first of all, zoomed out on the monthly chart, it's coming into a big support area, about this kind of $2 to 150 area where it IPO'd from. So it's basically done nothing its entire life, but it has gone from 80 cents up to $15 and back to $1. So just know that it's an incredibly volatile name. However, it's gapping up and holding today after getting finally above the 200-day moving average. 200-day moving average is flattening out. Those are a lot of positive things out there. I'd say the pretty easy trade is if it's above this, great. If maybe use the 200-day moving average for a stop, you can see it's been below the 200-day moving average for a long period of time, and now is just getting above. So maybe it's finally the time. Actually reminds me of UNG, which that kind of had the same pattern, was below the moving average and then got above with it flattening out, and it's been pushing a little bit higher after that. Sorry, just making a note, because that is, we could have a little rant here. That's the beginning of something that I want to test. Neocorp. Well, it's just NB, right? NB. So if you want to know how I trade as a systematic trader, as a quant, it's kind of stuff like this. I was like, oh, that's an interesting pattern. Spent pretty much 2 years below the 200-day moving average and is now kind of getting above and holding above for a period of time. Might be interesting to buy, use the 200-day moving average as a stop, and then just hold it as long as it's above the 200-day moving average. So that's the difference of how kind of quantitative traders think. So I'm not, could this work? Yeah, a little consolidation after a nice move up. If it breaks kind of 269, nice 270, something like that. Maybe it gets to 420. That nice. Could recover. So that's a decent little move. But I'm always thinking about, is this a setup that I could repeat? Is that a setup that I could test and then I could see what happens? Could this be a way to potentially pick trades that are kind of turning around? And that would be 200-day moving average is pointing down for an incredibly long period of time and then starts to flat out and then starts to push higher. Maybe. And I don't know. So I just made a note for myself, my reminders, and I'm going to sit down. I'm going to test it. And if it works, then great. I'm going to trade it. It'll be part of Stats Edge trading. If it's awful, then I've just wasted probably a day or two of my time testing it, and you'd be surprised how much that happens, right? How much I test that someone says, "Oh, this is a really good setup that I love," and I test it, and it's awful, and then we kind of move on from there. So again, I'm gonna start going through charts, but you guys can ask about any chart, crypto, forex, equities, international equities, whatever it is you're after. Ask away, and I'll take a look at it for you. But a couple things I wanted to look at is this. I think is very interesting. So the RSP is the equal weighted S&P 500. So essentially, it is the S&P 500 not governed by big cap tech. If you're Nvidia, you have the same weighting in this as XYZ tiny company in the S&P 500. Up like a percentage point on RSP, where you're down on a lot of other things. So that to me is getting a little bit interesting. The fact that this is pulling back way less than this, it means that this is kind of being governed by big cap tech. So things like Nvidia, there we go. So Nvidia is now down on the day. A lot of these bigger names are pushing down. So it means that there's other names that are doing A-OK. So I think we need to take a look at some of those other names to see if they're going to end up holding up when I look through some of these names. The Dow is actually doing much better than everything else, but it makes sense. The Dow does better in scary markets and does worse in great markets. We can actually sort by percentage change, and we can see which of these are doing the best. We have solar up 2% of all things. So that might be a good one to look at our FSLR. Look at something like First Solar. So this is one that I've been watching for a bit. If you zoom out, the reason First Solar is interesting to me is that we have this prior low right back here. We've undercut that low, but now we're trying to break back up through it. These type of plays I absolutely love, right? I think the kids are calling them liquidity grabs now. I've heard undercut and rally. I've heard, you know, bull trap on these kind of names. I've heard a lot of different ways to describe this. But the idea is that you come down to an area that was support before, you fake out below that support so that people get triggered out of their position, shorts get in, you trick everybody who's just, buying breaks of support resistance, and then you just rip it the other way. And then those people end up, the shorts have to cover because they're underwater. The longs that got stopped out, FOMO back in. You just have this whole kind of everybody going back in saying, oh, this is the move that I actually want to see. I want to see happen, even though, all right, I missed that before. It's a nice little pop up there. So that's an interesting one to keep an eye on, is for solar, just because it's doing so well. And then PSIL, Psychedelics, is doing well. And I actually noticed on the StockTwits website that, what was it, CYBN? Yeah, this one's actually, I don't know if there's any news out or anything on this, but this whole psychedelics sector I've been watching really closely. I liked it way more when it was up here, but it's still actually holding these December 2024 lows. This move right here was from that crazy drug type company, but psychedelics is interesting to me. It's one of those names where you can look at MindMed. I think is the nicest looking chart. If you zoom out, has a nice looking chart overall. CYBN has kind of the worst chart, but it's starting to bounce here. What's the other one? CMPS. Yeah, it's another worse looking chart. ATAI, is that one? I think ATAI is one that's holding near support. So a lot of these ones look interesting. And the difference between these and the weed stocks that I think are gone forever, never coming back to all-time highs, is that the weed stocks, they look to be commodities, right? Hello. I see a stay invest there. Hello. Again, ask away whatever charts you want to see. The difference, so something like Tilray, I don't think has a chance to ever come back, right? This thing's gone forever. And it's because these things become very, very commoditized, and it's cheap. It's called weed for a reason. You can grow it absolutely everywhere. The difference with the psychedelics ones is they're going for like FDA approval. They're trying to be drugs. They're trying to be healthcare companies. They're trying to compete more with like an Eli Lilly than beer, right? They, something like CYBN doesn't want everyone to just go and be able to take shrooms and have a great time on the street. What they want is they want to get whatever it is that they're looking to get past, and then become part of a routine when it comes to medical care, like an actual medical care type of thing. And I think they could. I think there's a potential for there. There's a lot of, I was reading about some of the science behind it and watching some of this, and there's a lot of good science saying that maybe, there's a shot that these things are going to be replace SSRIs, replace some of these other things that people use for depression and all of that don't work very well. Uh, you know, so it's interesting. So the fact that PSIL is, I've got this sorted by how much it was up on the day, and PSIL, psychedelic ETF, being up the second or third most is super interesting. So I had to mute myself. My dogs fell asleep behind me and starting to scream. All right, Baba. Someone wants to look at Baba. I think Baba and China's kind of the whole thing overall, where FXI is going to denote everything. Talked about this, right? The 200-day moving average. This is kind of what I'm thinking about, right? 200-day moving average, under that for a long period of time, starts to flatten out, move higher. Maybe you start to buy pullbacks into the 200-period moving average. Maybe that's what's going to happen. But nice little gap up. I think it's important to see the gap hold. This line here is the anchored VWAP from this prior high. This is where I got long Baba initially. I sold a little bit out. I obviously wish I sold way more into this, and then stopped out the rest when it broke down under this anchored VWAP. So overall, a good trade, but could have been a much better one if I wasn't so greedy. If it starts to get going above these highs again, I think I might get involved again. Problem I always say with China is you've got so much headline risk, and especially with their markets being closed overnight, you just have a lot of that overall headline risk. If Trump comes out and goes, "We're now friends with Baba," or "We're now friends with China," then this thing is up probably to 140 again, maybe even higher. Who knows? Uh, Probably higher, I'd say, because there's probably a lot of people short it right now. If they come out and they say, "Okay, we're upping the tariffs again to 200% or whatever ridiculous number they're going with now," uh, you have that headline risk. So when you trade it, trade it like you're trading an option, where you're buying enough that if this does get cut down to 70 or 50 or something completely overnight, which is possible, you're okay. The other thing is there's been talk about delisting their securities as well. That's a big risk. So you have big return, but big potential return. You also have massive risk. So you just have to balance that. So I always say treat China like you treat a biotech, in which we just talked about it with like MindMed, right? You treat the psychedelic sector and say, hey, if I'm right and the psychedelics become the thing, this thing could go to like 100 or 200 or 300. This could be a crazy, crazy mover. And, I can make 10 times my money from here. And if they come out and they say, yeah, psychedelics don't really work that well for depression, it's a zero. And there's just no middle ground there. So you have to be okay with that. Comcast, that's CMCSA, right? God. The fact that I know that and I don't know my wife's phone number is just wild. I don't know if I've ever traded Comcast, but I just know the ticker. Long-term chart, not looking good. Right? I always want to look for stocks that, when the whole market broke to new all-time highs, this stock did as well, and this one didn't, right? So all-time highs are 60, still a 50% drawdown, even when things were kind of sunshine and roses in 2024. Take this compared to the market, right? This is that prior high. We just blasted through that. Yeah, and now with CMCSA, just couldn't get going. So unless there's some sort of news that you think is is going to change it. I know they have earnings coming up in just a couple days here, so you have to obviously be careful of that as well. If you end up getting that turnaround, then great. Have at it. Feel free. I just think you're stuck with inside this massive range right here, and that is stuck within this bigger range kind of right here. I can just draw these out. That, right? So you got this big range, and then you're stuck inside the small range, and then if you zoom in, you're still stuck inside of a smaller range, right? And the way I look at it is I want to trade things that are people care about in the moment. They're in the news, they're interesting, they're exciting, something cool is happening. And then I look at something like CMCSA and I'm like, no one really cares. Right? This thing hasn't moved. Are they losing money? Like what's going on here? No, they're still making money. But just can't get going. Right? Same with the next question is Pfizer. Same with Pfizer. This one just cannot participate. So the oh geez, how long of a low is this? Wow. Not since 2012. I implore anyone who's kind of looking at this stuff just to look at the studies about trend following and about relative strength. We know not a lot about the market. There's not a lot that you can kind of put your finger on with the stock market and say for sure. However, we know that trends, generally speaking, persist. I'll let this dog out. It's like the universal things with a dog, right? Wherever I am, I don't want to be. If I'm in the office, then I want to be out of the office. If I'm out of the office, I want to be in it. Trends persist over time. And if trends didn't persist over time, there'd be nobody who would be profitable trading, right? They have to. Not all trends all the time, but there has to be some trends out there. So we know that stocks that move lower, generally speaking, have a better propensity to move lower. It's like one of those, right? Isaac Newton, right? Force applied until force gets redirected, kind of thing. There's nothing out there that I'm looking at that's saying I want to pick up Pfizer here. Now, the story could be way different if you're a value investor and you've done the research and you realize what they have in the pipeline and what they're making now, and you think they're undervalued, and you know you're studying the expiration on all of the drugs and when they become generic. It's a lot to do to become a very hardened expert on a particular name, on a particular sector. When I look at this as a technician, I simply say, okay, well, Pfizer looks way worse than something like an Eli Lilly, which is still struggling, right? This whole XLV, the whole healthcare sector is struggling. But you look at something like Eli Lilly, and that one's actually holding on okay. And then you take Pfizer under the same time frame, and that's just hitting new lows. So this kind of trade only makes sense to me if you have done the math and realize that it is either has something that's coming up very soon that's going to change the way everybody is thinking about Pfizer. Ideally, something that isn't known, because if it's known, then everyone would know it. It'd be priced into the stock. So they have this drug that you're going to take a bet that this drug is going to really save their bacon, because a lot of people don't think it's going to be as big of a deal as you do. Like, again, we can talk about, like we were talking about with psychedelics, right? You're kind of playing if the psychedelics pass FDA, the $5 stock is a $50 stock, and if it doesn't pass FDA, the $5 stock is a zero. I don't think Pfizer is probably going to zero, but people were trying to pick top bottoms on this from $40 down to 20. So a new drug that's going to change everyone's mind. That's one way to look at it. Another way to look at it would be simply by saying, I am going to focus really hard on where I think the fair value of this company is. And that's more of a value investor thing. So again, you need to know how much they're making. You need to compare that to other companies. You need to know how long they have in their pipelines before they become generic. There's just a whole bunch of random stuff to talk about there, which I'm not the expert of. And those are the only two times buying something that this beaten up makes a lot of sense to me. Now, If I take something like I talked about before with this EVER, right, I'm trying to buy this one is selling off right now, but if you look at it on the longer term chart, it still looks strong. So I'm basically buying sell-offs in what's a strong name. Pfizer, you could make the same argument and say, well, if I look at, say, the monthly chart, it's very strong and it's just pulling back here. I don't think there's anything wrong with that. It has to do with time frames. If you're trying to bet that this move from this drawdown from $60 to 20, this 65% drawdown is over, go ahead. Just know it's probably going to take a long time to recover that. A good example with this one could be like Intel. Right? I think this is the monthly chart of Intel. I think there is a logical argument to be made that Intel, being in most of the computers people use, is not going away. It's not going to zero at some point, but it's kind of, yeah, both the same. It's down 70% from highs, which means the market has determined that this thing is having a bad time. It's just right. You got Nvidia who's doing great. AMD's not even moving. You have a lot of things out there that are holding up. If you look again, monthly chart of AMD, monthly chart of Nvidia, and then we have Intel, the exact opposite. So again, a value investor's bet is that this thing has gotten beaten up too much. The management will turn it around. It's gotten to a point where it's incredibly undervalued. It's a giant American company. It's not going to go to zero. I don't think there's anything wrong with taking a bet there. I just don't think it's a trade that I want to make, right? I want to be buying best of breed, right? So if I'm buying in the semiconductor space, I'm looking more at an AMD, even though it's gotten incredibly beaten up. But I'm looking at an Nvidia. I'm looking even just at the SMH, right? You can see how well these charts have been looking versus something like an Intel. And that's the same thing with Pfizer, and I'd even put Moderna, mRNA, in the same field, right? Where mRNA, this thing's been selling off as well. Both these things are looking pretty bad. mRNA is almost back down through its IPO price, which is just insane. So if you're talking best of breed, you're not talking Pfizer, you're not talking Intel. If you're talking, I want to buy the dip and I want to buy something that's undervalued as a value investor, go right ahead. I think what I would look to do if I was trying to buy, and I guess what I do when I'm looking to buy things that I think are beaten up but might recover, is just wait for some sort of bottom to be formed. Say this kind of same thing that happened on Moderna is going to happen over here, or even on Pfizer, right? Where does the last time it bounced? Yeah, so this is the 2010 this is the great financial collapse right here. Right? You didn't need to be the guy who bought it here, right? If you waited for the retracement up and you waited for this higher low to be made and say you were the guy who bought it here, well, that's 17 and then it's still grinded its way up to $50. So if this same thing's going to happen on a weekly chart, then what you'd be looking for is a bounce that when it sells off, it makes a higher low and then starts to push higher. Just shows that there is then demand from that other side. So I hope that makes sense. I'm just fascinated, even though I have no position, with this bull starting to kind of give it back here. Made another push to all-time highs and failed. Again, I am very tempted not to take like 25 shares and just see if I can find some shorts on it, because we had Newsmax. And Max, and then what? Right, this thing went all the way up to, this is wild, $300, and then all the way back down. And then we had, what was it, WTF? This was the other one that went from $4 to 20, and then the next day just imploded back down to $6. So you got to think the same thing's going to happen at some point with Bull. I have zero idea when. So like if I'm going to take a trade, it's going to be like 10 shares, and I'm just not gonna worry about it ever again. So it's like a reverse train wreck. I was saying that and then just ripped a new high. So that's just hilarious. All right, let's take another little look around. I'll see if you guys have any more questions. I wanted to talk a little bit about some of these meme stocks, right? So Fartcoin, haha, fart's funny. Um, but what's interesting about some of these meme stocks is that if the market's going to fall apart, if we're all going to zero, right? If everyone's worried about everything, why is this thing, Fartcoin, up 400% off its lows? Like, why have we 4x'd from our lows here? I just think it's one of those things where the I don't want to say that there's like smart investors in these particular names. Like these are like the cream to the creme that we need to look at. But I do think there is something to be said about this as a risk off, risk on indicator. If I am someone who is incredibly worried about the future of the economy and the world and what's going to happen to my job and all this, am I plowing money into Fartcoin, making the market cap be like $1 billion a share? Am I doing that? There's no way. And you could do Peanut the Squirrel, right? That's still down a bit. That had a great couple days over the weekend. Uh, yeah, some of these meme coins have been doing actually pretty well off of their lows. And I think that leads to a bigger kind of conversation on Bitcoin. The fact that it came right down to the breakout area and then held. And I say it all the time. I think Bitcoin is the best indicator out there when it comes to trading these particular names the way they should be traded. I don't think, sorry, put your finger in your ears like Bitcoin maxis, Michael Saylor, if you're watching this. Bitcoin has proven itself not to be an inflation hedge. It doesn't hedge on market drawdowns. We saw that in 2023. We saw that again in this year, right? It sells off with the market, it bounces with the market. What it is a risk on asset. If people are feeling good and they're feeling risk on, they're buying Bitcoin. If they're scared about the future of the world, they're selling Bitcoin. So the fact that this is now a risk on asset just tells us that if it's bouncing here and actually bouncing pretty well, that maybe it's risk on time. Right? If you look at this with the SPY had this little bounce here, and now we have Bitcoin, and it's bounced as well, and it looks like it might be sustaining. So one thing I'm watching in Bitcoin to potentially get back involved here is just a break of this trend line and a hold. And I don't think there's any magic with trend lines. I don't think it matters how you draw them. I think what a trend line just represents is the trend of the stock, and if you're looking for that trend to change in order to buy it, I think that makes sense. And you can see we've hit right 1, 2, 3, 4 times now, but we've been holding this kind of 75,000 level where we broke out of. So if people come in, they end up looking to buy a breakout of this trend, then I think that could be an area to take a shot, and you could just risk down here for your low. And then your question is that a good risk reward play? So say your risk is down here and you're thinking it might get back to highs. Well, that's 2 times your risk. So you're risking $1,000 to make 2,000, right? 10,000 to make 20,000, $100 to make 200, wherever your account size is. And so then you got to say, okay, well, what's the probability that I'm correct? If it's any more than 50-50, seems like a pretty good trade to take. So I'm interested in maybe getting involved here in Bitcoin just because it's holding really well and doing a much better job than like Ethereum. I mean, Ethereum never broke out to new all-time highs throughout this, just been absolute dog. When we're back to this high rate here, it just failed a long time ago. And then, the slope of this downtrend line is just way worse, and it's nowhere near breaking out of here. So it just shows, again, Bitcoin still king, Bitcoin always king, and it might be time to get involved. And then the other one was Solana, which could be the reason that a lot of these meme coins are starting to perk up again, that we're seeing, 400% move in the Fartcoin. A lot of these things, I think all of them are pretty much made on Solana at this point. And we're holding this zone, this all important 126, 127 zone. We're holding it pretty good, and we're holding it across the board. So if we draw the same trend line, you can see we are through that already. right? If we kind of squint a bit, maybe connected here. Again, there's no magic in trend lines, but either way, we're already through that trend line showing some a change in trend first in Solana, and then maybe we'll see it in Bitcoin, and then maybe we'll see it in Ethereum, maybe if Ethereum ever gets going. But interesting for people who trade crypto like myself. Again, it's not like a tiny amount of my net worth. I'm either in cash or I'm in crypto. I own a bunch of Fartcoin from 50 cents. Just I trade the charts. But it's one of those, the larger idea behind this, I think, is really on whether the market is feeling like it's time to put on risk or not. And I think you see that in the cryptocurrency space like really strongly. Right? We had the February massive rip up, and everyone was super excited that um, the election was over, and right here's the November. Right, there was the end of the election, and it's just ripping, and everything's doing fantastic. And then cryptocurrency fell first. Doesn't mean it's always predictive of what's going to happen in the market, but I think it is predictive of what type of risk that we're seeing and what type of risk people are allocating to that. Right? Are you buying Fartcoin or are you buying bonds? Right? And people are not buying bonds right now. There's a whole nother conversation we can go into. I think this is solely the reason why Trump flinched when he did, is because the bond market looked like it was going to completely collapse, and if the bond market collapses, that's the end of the economy as we know it, kind of thing. So they're not buying that; they're buying gold, and they're buying Fartcoin, and which is interesting because gold doesn't it doesn't do a good job in actually holding up in the market, right? There's no income you make from gold. There's nothing out there in gold that you end up saying, okay, well, I'm going to hold gold and I'm going to make XYZ from it. So when the market starts to get worrisome, it's generally not gold that is the asset that people are interested. It's generally more of looking at bonds or looking at income bearing instruments like Coca-Cola, interest bearing instruments like Coca-Cola, anything that pays a dividend, anything that ends up, pays you in some way as you're holding things, right? So that, you can see this if you go back in time, right, from 2011 all the way to 2020, all the way to 2024, gold did nothing. So gold didn't appreciate with the market, and it didn't really work for drawdowns either. So the fact that we're buying this up, I think, is more of just kind of a trend that's long overdue. DAL. So this is an interesting one. So first of all, relatively weak to the market. Right, Dow's down 42%. The market's down 15. And I don't know if you saw let's see if I can find it here. If you saw that chart that was going around, I actually tweeted it out. Not this one. This one. I don't know if this will, but nobody's coming to America anymore. They, especially from Europe. There's been a lot of. Oh, this is actually I retweeted this from the official StockTwits account. Right, this is the Europeans traveling to the United States, and this is kind of what's happening from it. Those aren't good charts. So people aren't flying as much. People aren't interested in moving. So some of these Delta, United, these companies that are specifically and solely American companies, right? That's all they're just American flying, right? They obviously fly across the world, but they're mainly for America. They're not doing great, right? So I look at this and I say, well, the good thing for Delta is that we have oil futures selling. So we have oil futures tanking. That's good because they can buy oil for cheaper to fly for cheaper. So that should be good for margins. But if nobody is flying, if nobody's coming to America, then these names are going to suffer. So I'd basket those with kind of RCL, which is down today, again, with the market up. The RSP is up 1% and the SPY is up 0.7%, and this is down. There's a couple of those names that are, they're getting hit. They're getting hit pretty hard. So the CCL, right? That is sold off there as well, not doing too well. UAL, which is United, UAL, United, right? That's not doing well. So these things are underwater. They had this big run when no one was paying attention, and now they're right back down. So a couple ways, right, to buy pullbacks like this if you want to kind of sit out and wait and have a moment. If you're bullish on this for some reason, and you want to have your moment to get involved, I know you guys have Brian Shannon on a lot. He talks a lot about anchored VWAP. So you take the anchored VWAP from all-time highs, and you say if it gets through that, I'm interested. That is just a kind of, this is the average market participant. If you start buying at the wrong spot, which is the all-time highs, you'll see, yeah, roughly around $50. That's where kind of sentiment could shift and people could get excited again. I know that's a long time between here and there. That's the wait. Or like we were talking about before, is do a basic trend line, right? There's my trend line. Uh, if the trend line reverses and we break up to highs, then great. That's another way to play it. You just got to be really careful just buying things necessarily at lows. So you've got your support here at 37. If you want to take a shot, you could simply say, okay, I'm going to lose that, use that as a low. Again, I'm okay with anybody buying anything as long as they have an out for it. Where I get worried is people that are just taking trades kind of willy-nilly. But that's kind of the thought behind DAL. It's fundamentally, which I'm not a fundamental guy, but fundamentally, less people are traveling to the States. I think that's problematic. Yeah, so that's going to be a headwind, and the chart is already reflecting that. McDonald's is one of those things where I talked about how when people are uncertain, they like to gravitate to things that are more certain or things that at least will make them money. And I think McDonald's is one of those things. I think that's why it's doing so well. It's kind of breaking out as we speak. I think this is a great one to potentially hold. You got to understand that McDonald's isn't going to rip. They're not gonna discover Big Macs 2.0 and the thing's gonna double. However, the benefit of McDonald's and the reason I think people are running to McDonald's is simply by saying, "Hey, I get paid, right? A dollar a quarter, $2 a quarter to wait. So I get paid a couple percentage to hang out here in a name that generally appreciates over time, generally does it pretty well, making money over time, and I get to just hang out as this thing grinds higher, and I get paid for it." So if you want to talk about flight to safety, I always think of McDonald's. I think about Coca-Cola. I think about some of these like really, really good dividend names that aren't just good dividend names because the company is crap, right? Look at something like AT&T or no, VZ, I think. Yeah, right. This pays a good dividend, but the company isn't doing well, right? T has actually done a little bit better recently, but still overall, right, not an amazing company. But you get paid a good dividend. So you can do those if you want, sure. I think the ones that really make sense is something like Coca-Cola or McDonald's or one of these slower, kind of lamer type names. And they're just places to hide out, right? They're going to do well when no one knows what's going on. Could there be tariff risk in them? Absolutely, but they're just such giant companies that they'll figure it out. It's if there's a prolonged trade war, I don't think it's going to be your McDonald's and your Coca-Colas that suffer as much as it would be your smaller companies that have a harder time sticking and moving, a harder time adapting, right? If Coca-Cola needed to source something from somewhere else, they could figure that out pretty quickly. If you want to know the extent of the tariff risk, I think it makes sense to just take a look at anyway. You can go take a look at, right, what is their tariff risk. You would find out pretty simply what they get from other countries. But just like McDonald's, you're being paid to wait. And the fact that it's holding on really well makes me think that people have already done the tariff calculation and they're not that worried about it. Right. So again, you're paid your $2 a quarter per share. Right. You have 100 shares, you're getting paid a couple $100 a quarter. You got 1,000 shares, you're getting paid a couple thousand a quarter. just to hang out, and knowing that the thing's not going to double. It's probably not going to get murdered either. Looking back, 2020 was probably the best opportunity on planet Earth to just full port your portfolio into McDonald's of all things, and then just get paid as this thing grown back higher into new highs. But it's one of those things where, yeah, what an absolute beast. And yeah, holding on really, really well when it comes to the market. So you can look at McDonald's. Uh, you could go to some other ones like Yum Brands, but I think this has a little bit more Chinese exposure to it. You can see the reason I thought of that is because anytime you see this line right here, this is with a little alert set. This is where stats edge trading guys are looking to buy Yum Brands. So if it pulls back this week into this zone, that's where we're looking to get involved, just based off the systems that we have tested. So there are some pullback names that are super interesting, and some of these names as well, right? The growth stuff, again, if you want to take the shots, PLTR, right? Palantir and names like this are doing very well. Full disclosure, I own a little bit of Palantir. I sold most on the open here, just because the system told me to. I overwrote the system and hold a bit. So there are some more growthy names that are working. I think more important than that is, right, where are you on the risk curve? If you want to play with McDonald's, better be pretty low on the risk curve, because that's going to be you're not going to make a lot of money doing it. You're also probably not going to lose a lot of money doing it as well. If you're trading something crazy like this, like Palantir or Bull or any of this, you better be a lot higher on the risk curve, because especially in this market, high volatility stuff goes crazy. This thing is still, and again, I keep looking over because I've just got a chart up there because it's just insane. This thing continuing to rip new highs. It's now doubled from the opening price. Yeah, it's now doubled from its opening price essentially. Just going crazy. But again, this is for degens. McDonald's is going to kind of be the exact opposite. All right, guys, one more chance open for questions. We got a couple minutes left, and then we'll shut her down for the day. Just want to go through, see if anything has changed with the overall market or changed with anything while I've been chatting. No, the SPY. So, right, this is 1 hour, 2 hours. So the SPY hasn't moved since we started chatting. The fact that it's come in and filled the gap, I think, is actually a good thing. So one thing that I'm watching now for the rest of the day is if that was the low of the day, and even if we just bounce a little bit, I think that's super interesting, because it means we retested the gap, found buyers in that gap, and then started to push higher there as well. So someone was looking at Lily, LLY. Lily is something, again, that I'm very interested in watching, and the reason is because the XLV is doing so well. And I talk about this quite a bit. If you have a very clean level of support like this, where it's hit 1, 2, 3, 4, and now 5 times, undercut that, stop some people out, got some people aggressively short, and then it starts to bounce. This seems like an easy one to me to potentially put some risk on with. Again, if we hold here today, this one is certainly on my list to buy with a stop down here, just to add to my kind of long-term portfolio to see if we grind back to highs over time. The thing I like about Lilly, as opposed to kind of Pfizer and Moderna that we were talking about earlier, is just look at this thing over time. Right, just does amazingly well. We had another kind of undercut and rally happen way back here. Draw that out. Where this was support a bunch of times. It undercut it right here in 2016, and then ground back to all-time highs. So that was a good look. So, right, you could kind of almost make the same argument right here, where it had a double bottom or support in this area, undercut it, came back through, and then slowly came to new highs. But just these are the names that I'm interested in buying, the ones that are holding up well in this market. They're overall in long-term uptrends. I can continue to buy them until that long-term uptrend changes, and then look for something else in a long-term uptrend. So I'm really, really interested in Eli Lilly. If it can hold this 750 area for any period of time, I'm going to look to get involved. Stop loss is going to go under 680, and then we just let it go after that. We have AT&T. Someone's asking, this is another dividend play. I think is an interesting one. where if we have, right, you're getting paid to wait. I think the recent surge this had a lot to do with them potentially being in kind of the space side of things. But you're getting paid, you're getting paid quite a bit just to kind of hold this name. So I think this is now I think this is now tied to the bet on space more than anything. Whereas instead of it just being a name that, you're kind of trading for the sake of trading it, you're just trading it because you believe in the whole space satellite type of thing. Uh, because if that's going to play out the way people think, where right the phones are all going to be satellite and all that kind of stuff, AT&T seems to be a good recipient of that. And again, you get paid to wait. So that's where I think the recent strength has come from. The fact that you're just people are like, I will totally take, right? I'll get paid just to hang out and do absolutely nothing, uh, in hopes of taking a bet because I'll get paid. Right? I'll nothing. I'm not going to buy things that aren't paying me right now. I'm only going to buy things that are, and AT&T is definitely one of those things. Same kind of with Intel, right? They pay a dividend. It's not crazy, but it's okay. Intel again, like I mentioned with Pfizer, Intel. I think if you're buying it here, you're simply making the bet that it's not going to go under. That the new management, I don't know if they've hired new management or if they're still looking, that the new management will turn this around. And by it, I mean the entire company. And if the entire company gets turned around, then you'll make a few bucks from that. Until then, I don't think you can. Technically speaking, there's nothing good about Intel, right? It's hanging out near lows. It's relatively weak to the rest of the market out there. It's relatively weak to semiconductors, right? And you can just do that by you hit the plus button, plus, and then you go SMH, and then you add. So now this red line is semiconductors, right? Zoom out, right? This used to track pretty well with semiconductors until Jan 2020, right? Where semiconductors continued to rip and Intel sold off. So the fact that it's not able to track with its sector anymore and it's showing that massive relative weakness to the sector, that from a technical point of view is awful. Right? You just want to completely, you want to look at it and say, oh well, that's unfortunate that it can't track anymore. Even if you kind of zoom in a little bit more, right, you can see it's still kind of tracked back here and then just completely fell apart as this went higher because it just has nothing to do with the whole AI thing. They just missed the AI boat. That's the biggest thing there. The I liked investing in relative strength. I want to buy things that are strong. I want to sell things that are weak. As a quant, right? Again, what we do at Stats Edge Trading is purely systematic and quantitative trading. A lot of my studies just show you buy the strongest thing and you end up outperforming the market. Buying the weakest thing doesn't. However, there's always a moment with some of these bellwether companies, right? Great American brands, whatever you want to call it, where you just think it's so beaten up that you just want to throw some money at it and say, if management can just stop screwing up, they don't even have to be the greatest management in the world. If they stop screwing up, maybe this thing's back to 40 in a year or something like that. And that's an okay bet to make. Right? I don't think there's anything wrong with that because the benefit of it is you're leaning against this low. Right? If we get into the 15s or so, then you're probably wrong. So now you're risking $5 a share to potentially make $20 a share. The risk reward's there. You just need to kind of put your foot down and say, uh, I'm just making this line in the sand in order to potentially, if I'm right, great. If I'm wrong, whatever. But that's the bet that I'm making. So quick stop by in the market just to see if anything's happened, and then we'll call it there. We're getting a nice little bounce here off of that gap fill. That's good. That's exactly what we want to see. So we came in, filled the gap. We want this to hold into the end of the day. That to me could be bullish action, and then maybe we see these highs right here. But remember, there is a lot of unconfirmed chat about whether or not there are tariff exemptions. I think the whole market is waiting for that. So be very careful while we wait for, are there will she, won't she on tariffs is continuing. Trade tight, understand that things are crazy right now. Keep your head on straight. And I appreciate you all for coming out, and I'll be back here on Friday. So I'll talk to you then.